Hello, and welcome to Urbanhood Money Talk. It's a fact that we need money to enjoy life and focus on the things that we really like. I'm your co-host, Allie, and I'm here with Mushi Buyan. Our mission is helping you gain financial freedom. You're listening to one of our special weekly market talks, which provides news on the upcoming week that may be important to traders. And we're super excited that you're here with us.
So by all means, this is all everything I'm sharing. My opinion only. This is not a financial advice. So
Thank you from all your lawyer friends.
you are looking at stock price for last 82 days since October,
Okay.
since last year around believe October 22nd till now. That's the chart you are looking at. So we have about 82 days of trading. Since 82 days, you see the interest rate. It looks like since last year, October, interest rate was going down.
They're going to crash into each other.
Yes, at some point you see that if we look at the stock this year alone, the stock is 8. Even if we look at it since January this year,
Yeah.
around here, that in stock is just look at here from here, stock is flying, right? And this is not, it did not go too much high from this side, this interest rate or whatever it is. It just almost stayed around above 3.5 or 4 area that way.
Wait a minute. Isn't the interest rate supposed to be over 4%? Why is it at 3.5?
Yeah.
Is this a different kind of interest rate, maybe?
I do
Mortgage
not.
rates? Maybe this is
Oh, yeah.
mortgage.
Yeah, this is the market rate. I mean, yeah, the
Yeah,
feds
Prime,
are
prime rate? Is that a
raising
prime
that,
rate?
but
yeah, look,
the
is
Oh,
the
Treasury.
yield we're talking about here on the right side, 10-year treasury yield.
Yeah.
FOMC rate.
exactly.
Yeah, FOMC, right.
Okay.
All right.
I was
So
gonna say, only the
look at the rate, but at least correlation, we know that the yield rate is not like increasing like crazy.
yes.
Hence stock is already showing good signs. Same thing happening with the bond market. Those who is in a bond is also is showing some sign of upside. So what that means, let's see the data. What you are looking at this data last 6 months, each thing is around 6 months of data. You are looking to show the inflation data. And then since last 6 months, if you're looking at the 2008 to 2009 CPI data and price paid per advantage 6 months. So if you look at this around this year, look at the December time, that's what we are saying. Since December that time, it went all the way high, but it's both of them, inflation also looking down, CPI also is looking slowly slowing down. So last 2 weeks, what we have seen that like the stock market in general, like when Powell came in, they said we are also seeing the change, all the change they made at the Fed increased rate almost like close to 5%. They are making, and that the whole market was afraid. What will they do? Are they going to be keep going up? And then how many times they're going to be increasing? So market was trading based on what was that 25 base point. They knew that market thinks that that's the right thing Powell going to do, the whole Fed, and then based on the data they're looking at, they will see are they going to slow down or he's going to saying that still there is a sign of weakness in the market long-term data. Hence, if they are going to talk about it in increasing again multiple times this year, he was kind of lean on that. He was optimistic. The data showing a sign of growth, that hence slowing down. So one of the things that last Friday came up, look at this, that's what I was hearing some of the people mention.
Yes.
Look at it. Whopping the 517,000 jobs, new jobs got created. That's why that got them. And then what happened? This is more than double in a month.
Wow.
So how did that come up? This is again, that kind of got down everybody. At first market was going, if you saw in the morning, Friday morning, market came down, boom, it was almost touching, was going to go over 4,200, but then later on it pulled back slowly, end of the day. But this data, what is showing you, look at that since February 15 to February 20. This is here, February 15, February 55 base unemployment rate, I think 1.5. But here at some point, it looks like it came all the way, came down to getting this is February 2020, I believe, this data.
So
I don't. Sorry, go
let's
on.
pause. Sorry, go ahead, Kian.
Last new 50-year
I
low.
was gonna ask him. I don't pay attention to the news stuff with them. I don't know anything about that stuff. But like, from my understanding, like you said, it says 3.24, a number last seen in 1969. Like, haven't they several times adjusted how they view or look at what unemployment quote unquote means? Like they manipulate the numbers or they change how they calculate that. Like, how does that take into account 1099 people or contracting people or like people that are not looking for jobs anymore? Like how does that all, like, don't they, like, haven't they changed the metric of how it goes by or something?
Clarifying point here. Why we look at this information is because it influences market sentiment, right? And it's market sentiment that drive market. What I want to say about this
so some people would argue that like they just don't care about news, they just look at technicals, right? Like they think there's no correlation or something.
The market basically bears whatever is going on.
So yes,
know the story behind it.
Yeah, there's one who said, yeah, market don't care about in this sentiment, it care about technical. There are two type of traders. One is short-term day traders, another one is looking at long-term. What's my long-term or swing you're looking at, right? So those who's looking at long-term and swing, they're sitting on their cash. So with the idle with the cash, as cash is sitting there, they say, hey, man, my God, they're telling us now economy looks good. Fed is not going to be increasing the rate. They are hearing all the good news, what investors are waiting for a long time, right?
Correct.
Right.
So that time, all the sideline cash started rolling in the market. When there is a catalyst already came out, catalyst already gave you signal, hey, we thought we are going to go recession, hence, things going to be bad, be ready for it. But now they're saying two things they were talking about last year, that when inflation, they never agree that inflation is going to may happen or recession may happen. They were saying we have a labor market, shortage of labor market, and they are talking about the inflation, the price CPI or the inflation rate is going out of control, right? Now that they are looking at the data, that since they increased the rate for almost 5% last year, they are seeing last 6 months that effect is showing that labor market is slowing, is not as bad as we thought. Look at the number. These number got a lot of people confidence on Friday. Said, hey, you double the number what was expected coming out. Then investors even jumped in more. And then
but don't they pretty consistently like manipulate how the unemployment numbers are made? Like didn't it used to mean something else in 2016 versus 2019 versus now? Like they change the parameters of what that means to be unemployed or jobs.
Also, they don't count underemployed and people.
Yeah, and how people have talked about how the past 10 years has been quote unquote like the 1099 generation. A lot of people are
it's not a good
contracting.
Yeah, they're looking at, they are usually looking at some of this data, ADP data, payroll, what's coming from ADP payroll, and they're looking at what's coming from labor department, when people doing unemployment rate for weekly unemployment, monthly unemployment number, what was those unemployment number coming up, right? So when they look at those data, that's based on this data, we are seeing that this huge number came out. And that's giving us the alarming indicator that Fed was looking at before, this labor shortage. But hey, we may not have that bad. But what you are saying, that I agree with you, now that more and more companies announcing they're going to laying off number. But look at when Amazon is laying off.
The laying off number is more in the tech world, right? A lot of other
that
worlds,
is not
like,
that bad.
not
Mushi, I think what Kian is saying is that, say 20 years back, unemployment rate had a different sort of formula. I mean,
Yeah,
it's not just a straight
yeah.
formula.
Right.
I'm pretty
It's just
sure
the way
they
they come
changed
back
the
from
formula
it.
several
Maybe,
times.
and
I'm
40
pretty sure they
years
changed.
back
last
was
time,
probably even
Kian.
more different. So, and yeah, hopefully, I mean, I don't know what the answer to that, Kian, is, but I mean, hopefully they adjust the formula, even when going back.
My
Yes.
understanding is in 2010 is the last time they changed the formula for counting.
Yeah.
I thought they did something during Trump's presidency.
Yeah.
I thought
Right.
he tried, but he couldn't change.
Do you think the sentiment is that it's going to go higher? Because I think it's going to crash down quite lower, to be honest.
Well, see, last week I was opposite of that what the poll Ron rang, and most of the time, and it seems like the wait till at the end if you really know what the poll's saying here.
Right.
Last few weeks is getting right, Ron?
No, I meant like
So-
in the longer, like I meant like the following months, like June,
Yeah.
summer, end of 2023. Like I feel like the
One day at
market's
a time, my friend.
yeah.
Right now,
Right,
1
right.
week at a time.
Do
We do
you
not
think?
care.
Yeah,
Do you
yeah,
know?
but
Do you
to
know
Kian,
swing?
go ahead, sorry.
I was gonna ask. Do you know swing traders and such that don't care, don't know what the news is, don't know what the internet is, but that stuff they just like look at technicals for multi-month trades. They don't care about.
I have hundreds of swing traders following me just to tell me that what to buy. Is this a good buy? I said, do you know this company? No, I said, go read about the company. But I know this, at least know some basic about the company and know how they make money.
Don't just pick some random symbol and trade it.
Don't follow because I
Right.
told you so.
Oh yeah, no,
CNBC tells them,
no,
buy this stock, and everybody starts buying.
I don't listen to any. Yeah, I just do my own analysis and
For now, that's the
Right.
last Friday. If you look at the week before last 2 weeks, or last 4 weeks this year, market is keep going higher and higher because of some of the fear people had that, hey, what's Fed gonna do? What's indicator going to tell us? And what all the analysts telling us? And it's killing all those short seller. I'm sure you
right.
already seen
Yeah,
them.
I think I saw.
I
saw
was
a
one
short-
of them too. I changed
saw.
swing. Yeah, S&P was before, that 4,000, then 4,200. That's 42, 4,100. Then it went 4,200, and last week it already went over 4,200. So
Yeah.
it's staying with this rate. If it keep going, last 2 weeks earnings it's not that bad. It's comparing what people were expecting, right? But market also is celebrating, hey, maybe all the worst is over. It's not as bad as we thought we would be. So let's see how long this momentum stays us follow the trend, my friend. I'm sure those who is following fear index, it went below 18.
That's awesome.
So usually fear index, whenever it's teens below 20, it's a good sign. And it's just showing the momentum last few weeks. It's there. If it stay with this route, you do not want to go too much with on the other side.
But doesn't January, February tends to go down because of holidays, people are on trips and skiing trips and stuff?
Look at last year. If you historically looking at last year, we are almost like following the same trend. January, February, and till March, it was going and then it dipped.
Yeah, but you think the sentiment is a bit more, positive than the news makes it out to be.
Too fast. Yeah, those who is following technical, it's like, yeah, we are touching all those, all those resistance so fast. Can it pull back? We do not know. Let's see. But for now, that there are good catalysts coming out until
it looks promising.
Yeah, looks promising until Fed or somebody come and open their mouth. Oh my God, what we said is wrong. Then you'll see the market is again heading back to the downside. And as far as the earnings, big cap is pretty much most of them gave a good number with all these difficulties they're facing, right? So, and they also adjusted. Look at Microsoft. Microsoft pretty much knock out $1 billion revenue from their forward guidance. And look at how Microsoft last week. It's just like all 262 or something it touched. That a huge number it ran, right?
Yeah.
Like a 14% year over this year Nasdaq in almost like in a month. In a month, 14% Nasdaq growth, huge, right? Last week 3.3%. S&P 1.6% last week. So you're looking at the last 4 or 5 weeks, they just keep growing up. It's not slowing down. And that big catalyst already is spoken. So let's see what happens. So next week, what's gonna happen? I think some of you already have seen that the chart is coming up all the more earnings, but big ones already came out. Some of this more one of the things I am looking into this week, just let's see what is this dude doing? What is these guys are coming up with, right? Uber. What did Uber do? Uber, we know that they have a good fundamental. The innovation, the growth behind the scene is really strong. Let's see what kind of number Uber coming out. What Chipotle coming out, Chipotle last earnings, they had a good earnings. The number it missed, Chipotle went down. So let's say this time what Chipotle does, what Uber, I'm going to be looking at this, I'm going to be looking at PayPal, and I am not in any of this position. If I find opportunity, I'm going to get it. Lyft, Cloudflare, those are the one company that I'm looking. If I see an opportunity, I'm going to get in. Otherwise, I'm going to sit on the sideline. I'm not playing any of this. And I know there are some people Zoom info and they're playing. I have no interest on this. Well, Pinterest. How's Pinterest doing? We know that the Snap did very bad. Meta did very well. Pinterest might do well also with that momentum. Watching any questions, guys?
Thank you, Mushi. Thank you, Vinny.
Thanks, Mushi.
Hey, Mushi, just
You are welcome.
I got an Uber last week, a call. Did catch some rise, but yeah, I'm trying to get out.
Uber, I'm looking to get in. I had a position before, I made money and got out. Now I'm looking at an opportunity, good opportunity. What's a good price to get in, Vinny? Or we'll wait for Jack.
Yeah, I had a 30 call,
30 call.
Feb 17th, short, it was a short one, but I think it touched my target level.
Meta paid me very well.
Nice.
And strong news always trumps
Technicals.
Yeah, so
That is true.
you know what we can predict might be happening on the technical charts. You know, a different unexpected earning news could change things very quickly. So just be aware of that. So I'll start with the S&P and then I'll go look at the stocks. Okay. So here's we're at a very interesting point. We have tried 4,200 and failed on S&P, and this is the third time we failed. We've tried twice before, very close to it, or actually we just hit and bounced back down. Chances are we may try 4,200 again. We were very close, actually, 41.98 on the S&P, so that might be it. I don't know. What I have noticed is how far the price is extended from the moving average. And if you look at my ZSM indicator, you will see
overextended.
Yeah, you will see it's above the 2 standard deviation level in terms of how far it extends. And I already got the red arrow saying that, you know, its momentum might be starting coming down. That doesn't mean the price will come down. But if you look at some of the other stuff, yes, they do come a little. And then, you know, if the movement is strong enough, that it may go. But in here, again, here's the other one, that the price did come down, went up and came back down again. I'm looking at some of the other examples. Right in here, for example, you see the red arrow here. It came down and then just continued. What is interesting is typically I would have a couple of down days before I would see like momentum changing direction. But here it happened right on top, right next to the highest high bar. So that's a little bit of a concern. Now the price could actually go sideways here. If it goes up, you know, 4,200, it's going to hit some resistance, and then about 4,325, if it ever gets up there. See, the issue is if you look at here, let me get a pencil here. So if you look at above here, we really don't have much of a resistance here. You see, they're all low volume nodes. So there could be a fast up move till about 43.25, 43.50. But I just had an earlier option session for, I know some of you were in there, and we tried to do a diagonal, bearish diagonal, which you normally do for credit, and there wasn't enough credit on the calls, okay, to kind of do it. It tells me the calls, especially short calls, there isn't enough credit, so they don't think the price will be going up that much. Okay. But that's kind of my reading. You know, market may change. So, and if whenever you're at an inflection point, life is always rougher. The other thing I noticed, typically, you see this yellow orange line, and then you see the red line. The orange line is one standard deviation channel. Okay. So linear regression channel. Typically S&P, you know, stays within the one. You may go up a little bit, but it usually stays around this channel. This time we went all the way almost up to the 2 standard deviation channel. That tells me that we're very extended, and reversion to the norm is the more likely scenario. Okay. The next question is, if we drop, where are we going to drop? Okay. So one thing is we kind of see a long high volume node around here. And I'll tell you the numbers. Paul, it is roughly about 39.50. Okay. So, and we actually had a lot of trading around 39.50. So that would be the first target. If it goes below that, then we're kind of looking about a 38.85, followed by maybe 38.35 or so, and then finally 37.65. Okay. The problem is if we drop below 37.65, there isn't a whole lot that's going to hold us till all the way down to 3,500.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.